Kia ora, and welcome to a very special edition of the CoreLogic Property Market Update for April 2020, brought to you from my home office here in the nation's capital of Wellington. Before we get into this month's update, I'd just like to take a moment to say that I hope these uncertain and extraordinary times find you and your families safe and well. Well, where to start? Last month we thought we'd experienced a crazy few weeks before filming, but we didn't even know we were going into lockdown then, so things have progressed a long way. The flow of information from the authorities in terms of COVID-19 updates and support to the economy had slowed for a bit, but as we near a hopeful release from lockdown, information is coming thick and fast again. We also have a number of Q1 stats or series to update, which will provide a perfect line in the sand for how the property market shaped up before the world was tipped on its axis. Firstly then, let's look at sales volumes. And with uncertainty building throughout March, on top of the lockdown itself kicking in on the 26th, the month produced weak overall figures, with a drop of 4% on the same month last year nationwide. Interestingly, volumes were up 14% in Auckland, perhaps a sign of less uncertainty and more confidence in our largest city in the earlier stages of the outbreak. Likewise, value growth finished relatively strongly across the country up to the end of March. Nationwide, values had grown 6.1% annually, and Auckland had even ticked up to 2.5%, the strongest rate for over 2.5 years. Of course, we know April will have very few sales due to the difficulty of transacting while in lockdown, so it will be some time before we know what volumes and values are actually doing. However, it's clear the housing market entered this period of disruption with strong foundations. With buying and selling activity stalling throughout April, we've turned to other signs of market activity to try and get a read for what's happening and what's likely to happen when we re-enter society. One of those measures is appraisals generated by real estate agents to provide potential vendors with a market value for their home. The number of appraisal reports being generated across CoreLogic's real estate platforms plummeted 85% at its trough. However, we did see a lift in real estate agent activity about midway through lockdown, suggesting some signs of life were returning to the sector. The Easter long weekend looks to have halted that momentum, so we're again left wondering whether this lift in activity will be sustained as we approach the end of the lockdown period. The other really recent indicator was properties being listed for sale in the days before we knew how difficult it would be to actually sell property in lockdown. There was a mini lift, not completely unusual for this time of the year, but certainly outside Auckland, the number of new listings on the market was more in line with the most popular time of the year in spring. This could have been a potential sign of nervousness from recent buyers with a large mortgage, or anyone concerned about future cash flow, due to economic and labour market uncertainty. As with the appraisals being run by agents, listings have started to lift again, and so have visitor numbers to online portal sites. After a wee break, and now with a bit of light at the end of the tunnel, perhaps people are now considering their options for a world post-lockdown. And it's also worth noting who the most active buyers were recently, as they could be the most nervous of property values dropping, thus behaving with some urgency to get a sale done when they can. Our buyer classification series shows us that investor momentum from late 2019 continued in the first 3 months of 2020, and in particular, those mum and dad investors with only one other property remained an active group. If they're inexperienced, flirting around the margins of affordability, and concerned about whether they can cope with a vacant property or a tenant unable to pay their rent, then they could well want to get out sooner rather than later. But the hope for owner-occupiers who recently bought has to be that they can get through for at least 6 months, with the help of both the government and the banks themselves. Speaking of which, it is worth quickly reviewing all of that support, as detailed on the official COVID-19 government website. This package is absolutely unprecedented, much like the health and economic crisis we find ourselves in. And we must add the Reserve Bank's actions here too, as they work with the government to ensure cash flow and confidence. They made an emergency cut to the official cash rate last month, now at 0.25%, and guaranteed it wouldn't rise for at least 12 months. They also delayed the bank capital requirements to encourage lending, and introduced quantitative easing in the form of large-scale asset purchases, which will keep long-term interest rates down too. Fair to say, they'll provide a heck of a backstop for the financial system in New Zealand. The million-dollar question then is of course what will happen to property values around the country. The first thing to note is that there will be differences across each of the regions, and local economies are key to understanding how they perform. Queenstown, in particular, is the source of many a question due to its significant reliance on the tourism industry. No doubt, demand for property, both rental and owned, will reduce. So it will then up to current owners, potential sellers, as to whether they're in any desperate need to sell, causing them to discount the price or not. If they can hold on due to all the support provided to them, then the hope, from a financial stability perspective, has to be that some semblance of travel and economy can get back underway to help them get back up on their own 2 feet. Could be some time though, so a significant element of downside risk remains. Many other areas won't be as significantly impacted as Queenstown, so may look to it as a lead indicator for what might happen elsewhere, the longer our economy struggles. Domestic tourism will have a big part to play, and as the Reserve Bank is stressed, so will confidence, to get the economy going again. Fingers crossed, we'll all be safely out of our homes soon enough then, and I'm back presenting in a proper studio next month. Until then, make sure you check out our podcast and head along to the research tab at corelogic.co.nz for all your regular and timely property market insights. Mā te wā.